Hey everyone. Fast-growing beverage company Celsius Holdings has seen its stock price drop dramatically in recent months. That has many investors asking if the stock is a buy on the dip. I'll answer that question in this video by reviewing the company's latest quarterly results, its longer-term cash flow and operating profit margin metrics, as well as looking ahead to what Wall Street expects from this company over the next 5 years. I'll complete all of that by comparing it against its valuation to determine if the price is worth the investment for long-term buyers. Let's get into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, in the latest quarter, Celsius Holdings reported revenue of $402 million, which was up by 23% from the $326 million it reported in the same time the prior year. The company has reported faster growth previously, and the rate of growth is slowing down, which could be one reason for concern from long-term investors. Celsius saying that revenue in the quarter was offset in part by reduction in inventory days on hand by a large distributor. Without this challenge, revenue in the quarter would have been faster for Celsius Holdings. Celsius gained approximately 35% more retail shelf space, increasing the average SKUs selling per store to 20, up from 15. And that's according from the last 4-week reading, which ended July 14th, compared to the last 4-week period, which ended December 3rd, 2023. Now, when stores are giving you more shelf space, that's usually a signal of great customer demand. Stores do not like to give shelf space unless the product is moving. Stores make money by moving product. They're hesitant to give you shelf space when the product is not moving. So this indicates that stores are happy with the performance of Celsius, and they continue to expand the shelf space because they notice customers keep buying more. Furthermore, Celsius's sales to Amazon increased 41% year over year to $39.9 million for the quarter, which ended June 30th, 2024. And Amazon is a great sales channel for beverages. They deliver it to people's doorsteps, and that makes it more convenient. People can subscribe to these items and have it delivered every month without thinking about it. And that's great for a company because you get to have more predictable sales. And when your sales are more predictable, that allows you to better manage your costs because you know how many customers are going to buy it, how much they're going to buy, when they're going to buy it. And so you can manage your inventory, manage your labor to match customer demand. That's much easier to do compared to unpredictable sales when you don't know and you have to make your best guess for what you think customers are going to buy. And there is mismatches between customer demand and customer inventory. So this sales channel is great. And overall, just the convenience factor, beverages are heavy. And if you are going to a store, especially to a store that you're not driving to and you have to walk to, you're not going to buy as many beverages because you don't want to have to carry all that heavy beverage all the way home. Whereas if Amazon's delivering to your doorstep, you're more likely to buy more because you don't have to be concerned about carrying the heavy items back to your home. Celsius is still in its early expansion phase. It began sales in the UK and Ireland in the second quarter through the fitness channel and in select gyms. So very small start for Celsius in the UK and Ireland, just in fitness channels and select gyms. They're not widespread in stores just yet. Sales in Canada continue to exceed the company's expectations in Q2, during which they introduced the sparkling green apple cherry version to the Canadian market. And finally, sales in Australia, France, and New Zealand are expected to begin in the second half of this year, with broadening reach throughout 2025. So they're going to be introduced in these newer countries, and if the sales go well, then they can expand to bigger channels. Just like in the UK and Ireland, they're starting with the fitness and select gyms. If sales go well, they can expand to more channels in those regions. So this is something I'll be looking out for from Celsius going forward. I highlighted Celsius' stock price is under pressure. It was trading at close to $100 per share earlier in 2024, and it's now all the way back down to $38.54, a price that it hasn't seen since 2023, since the early parts of 2023. In fact, it's trading at prices that it hit in late 2021. It was trading at a similar price to where it's at now. And I can understand a lot of investors are interested in buying this dip. Now, the company's already profitable, even though it's still growing, 22% operating profit margin in the trailing 12 months. And that operating profit margin has improved nicely from negative in early 2022. And the beverage market overall has delivered some excellent profit margins at larger scale. And so it's reasonable to expect Celsius can improve its profit margin going forward as it expands, as it reaches larger economies of scale. Its cash flow from operations are also solidly positive and growing very quickly. $270 million in trailing 12-month cash flow from operations, up from negative levels in 2022. Again, as the company grows and makes better partnerships like with Amazon, that will certainly help its cash flow from operations because, like I talked about with predictable sales, it makes inventory management that much easier and it allows for the company to expand its cash flow that much better. Now, looking ahead, the Wall Street analysts that are following Celsius stock, they expect it to grow earnings per share at 24% per year over the next 5 years. That's a big slowdown from the rate of growth previously the company was achieving. And so that could be another reason why investors might be selling off Celsius stock, is because they notice a big slowdown from the much faster rates of growth the company was achieving. Still, this big slowdown, this big drawdown has Celsius stock trading at the cheapest levels it's been at since early 2022. It's now trading at a forward price to earnings of just 30.61, down from forward PEs of over 50 and closer to 75 earlier in 2024. So investors who are interested in buying the dip in Celsius stock, I think are making a good choice. So if I was to answer, is Celsius stock a buy on the dip? I would say yes. I would say the company does have risks, as does any company in growth mode that's not yet achieved larger scale. There are risks, right? Especially with international expansion. You don't know if the customers in these new markets are going to adapt to this new product as well as the North American market has. Still, I think at this valuation, it's worth it for investors taking a chance on Celsius holding. I think this investment at this valuation is a good buying opportunity. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.